I wouldn't know how to switch it on. Welcome everyone, it's great to see you today. We were talking a little bit before this panel. And just to start, I just wanted to do an introduction of everyone, right? Like around, across everyone, just to understand a little bit what you do. We have people that are working in startups. We have advisors to startups. We have a chief data officer in a bank. We have a CEO of a lending company, two CEOs of two fintechs. And I'm going to start with myself. So my name is Pedro. I've been in Thailand for the last 2 years. I've been in Asia for a very, very long time, and 2 times. I have most recently been Chief Data and AI Officer in True, the telecom company. And now I am helping European startups to get established in Asia. I am also teaching artificial intelligence at Chulalongkorn University and doing different things. But maybe we can start from the beginning, and you can just briefly introduce yourself and tell us what you do.
Sure. Thank you, Pedro. My name is David. I look after KYC and fraud and payments risk for a RegTech, a regulatory technology player at Advanced AI. Been with the company for the last 2 years and based out of Singapore. So, yep.
My name is Daniel. I'm Chief Data Innovation Officer for Tatra Bank, which is a European bank. And I'm leading departments of data governance, advanced analytics, and innovations with focus on artificial intelligence and making solutions out of it.
Good morning, everyone. I'm very happy to be here. Thank you so much for the invitation. My name is Rosalia Gatau. I'm the CEO and co-founder of Bixi. We are a financial application targeted at getting women to start managing their money and start taking action on investing.
Good morning, everyone. My name is Anil Pinapala. I'm the founder and CEO of FlexPay by Vivify, which is a fintech that is focused on digital lending in India, mainly for the underserved and unserved segments that had very limited credit access. And we use a lot of AI in our underwriting, in our KYC collections to bring access to credit to people who have been traditionally left out by the banking system. Prior to this, I had a lot of experience working in the subprime unsecured lending space in the US and primarily lending there as well. Thank you.
Yeah, good morning, everyone. I'm Mirko. I'm based normally in Germany, and we developed a funding tool for search grants applications and building now an AI to do a successful grant application. That's not that easy. And on the other hand, I'm consulting a lot of tech startups in Europe. And yeah, I think I'm quite know and I quite see a lot what they're doing with AI now in Europe. And yeah, that's me.
Very good, excellent. So I just wanted to start this conversation with a general question, right? In November last year, ChatGPT went out for the market with a massive adoption, both in massive segments, both in consumer segments and in B2B. And I wanted to ask you about generative AI. What do you think the business models for generative AI in your respective sub-industries within fintech or financial services is, right? There are many, everybody's talking about that. We see on LinkedIn every day new applications, new news about it, but what are the business models? How can we implement this and drive our business with? And who wants to take it?
I'll jump in. So, okay, at Bixi, the problem that we're trying to solve is that women don't invest. I know that sounds like a really blanket statement, and maybe there's a couple of exceptions in this room, but writ large, fewer than 1% of women globally invest. And there's a number of reasons for it, but one of the reasons is often women don't feel like the financial products available on the market really appeal to them. Women tend to be longer term, they tend to be more value-based, and so we actually use aspects of ChatGPT and AI through our platform to aggregate or find from the aggregated universe of financial products products that are really attuned to how women think about investments and what we value, because we value more than just the bottom line. So that's a really really low threshold way in which we are using ChatGPT and generative AI in our business model.
I'll go next. Traditionally, we have used a lot of AI and ML in our underwriting, and these are mainly based on large computational models, where we have taken a lot of disparate set of variables, sometimes 3,000 to 5,000 different variables, to be able to underwrite a customer that has not traditionally underwritten. And that's how we have been able to bring access to credit to millions of Indians who were not getting credit prior to us. And when you talk about the credit spectrum in India, we are talking about customers, our customer base, which has incomes below $300, and we can start them out with credit as less as $8 to as much as $3,000 based on their credit profiling. And that's how we have used a lot of AI. But specifically with respect to GPT and other large language models, what we have seen a transformation in our business is mainly related to using these to help in customer onboarding. As I was referring to earlier, there is a large section of Indians who have a smartphone but are not literate. For them, it is very difficult to go through a long application form, whether it is in their own language or in English, to apply for a loan. Now, where we are applying these technologies is using voice and video to ask questions, and they are answering those through the video or voice, and we are able to transcribe them and then use it as a loan application form, as well as for doing KYC. And that's where large language models hold a lot of potential to bring, kind of bridge the digital literacy gap, where people today, even with access to technology, may not be able to take advantage of technology. And I think that's where the large language models and GPT have a potential to kind of bridge that financial inclusion gap.
I think there's also an internal operational benefit here to embracing ChatGPT, because I think with external models, yep, there's the customer-facing element. Internally, you can do a lot more based on the current resources that you have. You can, whether that's one developer, pushing out code, or of the equivalent of 3 developers previously, right? Or whether it's answering security questionnaires and just doing very monotonous tasks that can now more or less be automated. I wouldn't say full automation. There still needs to be a human in the loop for the quality assurance, but you can certainly do a lot more now. So the companies that can embrace this operational model, they're operating leaner and have much higher output than what they normally would have.
I will maybe continue because you mentioned let's say internal processes. We started to build capabilities already in around 2017, 2019, and with the ChatGPT, let's say we faced the overhype because a lot of people mistake the generative AI with general AI, which is quite different. And currently, we are looking for the use cases for this ChatGPT, and in banking industry, it is not so easy. Besides making your sentences more beautiful, we are a little bit afraid to put it on the external market, like customer facing, because the explainability and how the model will operate on the external landscape is quite difficult. But we are looking for internal use cases, as it was mentioned. So as a bank, we got a lot of the regulations, SOPs, internal directives, and it is often very hard for employees to navigate in all of this. And we have the model under control. We can fine tune, we can have feedback loops. So I think this will be the first, let's say, use cases that will bring value to organizations more on the internal side, where there will be under control. So.
Yeah, last but not least in this round. Yeah, I see more different point that we have on the table right now. This is the concept. You need concepts to build AI in your company. This is good that you have the generative AI a large language model or a small language model, like a client from us built a small language model from the Oxford University, that you have these models on the table, but on the other hand, you have some business models. But to combine these both, you need a clear concept, and you have to build these concepts, how to use AI in your company. And this is
what is difficult.
This is really difficult for companies. We talked in the beginning before startups, but this is really difficult for companies, how to use all this data that they have on the table. For example, in banks, they have, or in the fintech or in the financial industry itself, to use all this data to build an AI that is really useful and helpful for the customer, for the processes in the company itself. These concepts you need, these concepts you have. And so my opinion is that every company in the future, in the next 5 years, needs an AI department. Build up an AI department and take care of these things. That's my opinion.
And that takes me to the next question, which is, how do you use, you are referring to it, how do you use all the data that a fintech or a bank has in order to solve probably the most important question that a bank will have, which is who I lend to, right? What are the different approaches in which you can use data and AI to underscore or to underwrite customers, right? And you were talking a little bit about that, about how you use alternative data or historical data of your existing clients, and that will be very, very interesting to answer. I was Chief Data Officer in True, and one of the things that we had, or that we try to do, is external monetization of our data, particularly for credit scoring. The amount of data that a telecom company like True has is huge, right? So we had access to all the web history of all the customers, all the location history. We can know your interest based on the websites you visit. If you go to play yoga at 7 a.m. To a park, we know that. We know the payment history that you are doing. I mean, a telco will know what credit cards you are using, probably doesn't know what you are buying exactly, right? Because that information is encrypted. So I wanted to ask you more about underwriting clients with alternative data and AI. Maybe we can start with you because that's really your business. And then maybe we can go to Advanced AI, which is a company that is providing that as one of the services that they have.
See, the underwriting piece is the most critical piece in lending. And we are always, especially when you're trying to go after a customer who has a very credit-thin file, it is always, we try to look for sources of data which are outside the traditional bureau data. Now, credit bureau data is very rich. If you have it, that always forms the base layer of what you want to underwrite with. And in India, there is a lot of financial inclusion that has happened, and a lot of bank transaction data is available, and it's available through what is called as an account aggregator framework, wherein you are able to look at the customer's data across all the banks. And there is a technology in India we use called UPI, which is Unified Payments Interface, which is used for paying both person to person as well as person to merchant. And typically in a month, there are about 10 billion transactions that happen in India on that platform, with about almost $200 billion in value that gets transacted. And we also use that portion wherever it is available. But in terms of the alternative data, the holy grail is always telcos. The telcos have the greatest and the widest array of data that any alternative lender is looking for. You've talked about location-based data. We used to use a lot of it prior to Google kind of tamping down on how much precise location we can use. But if you're able to partner with a telco, and telcos either in your case, maybe I think you were creating a score based on their data. No one's really wanting to share the raw data with fintech or lending because that's their proprietary technology. And we have been able to take away some portions of device data, browsing history data to kind of help fuel our underwriting. But I think the greatest opportunity for fintechs and telcos is to partner to come up with scores for customers who are kind of underserved and are not in the traditional financial system.
Yeah, I want to just resonate that because I think there's a lot of similarities to what Anil has seen in India and also throughout the rest of Southeast Asia, because I think here in Southeast Asia, it's a mobile-first economy. So the pattern is that you have quite a number of people that are in the rural areas that are underbanked, underserved, throughout Indonesia, Philippines, here in Thailand as well. They just don't have physical access to a bank, but they will have a mobile phone. They do have device data. So there are alternatives, and I think the key takeaway there is don't try to do it alone, right? Build a data partnership ecosystem if you can. There's, I use another metaphor, is that the high tide rises all boats, right? So it's, in that sense, if we can pull the data, we can find trusted data partners like telcos, e-commerce, alternative sources, perhaps device details that are shareable with consent, then you can build very interesting risk models that will help you lend and have a lot more smarter deployment of your capital and lend more safely. And there are quite a few different AI deep learning models that can be used to model off of those data attributes. So,
I don't know, Daniel, if you want to mention something about alternative credit scoring in traditional banking. So we have discussed in more a fintech environment, but what is the role that this kind of external data could play in well-established banks? Is something that is, because subject to the regulation that the financial system is that something that makes sense for the industry?
It definitely makes sense, but overall banks are heavily regulated. So for example, if I take it from the view of European Union, but I think it is similar in other countries, when we want to change the credit model, it takes several months. So we need to submit the model to European Central Bank, then it's reviewed and so on and so on. And currently, a lot of the banks are not even allowed to use some machine learning, which are, let's say, a little bit more black box. So from this perspective, it is really hard for traditional bank to, let's say, create the new models. We see the huge opportunity in the alternative data, so we try to collect, for example, ESG data, mobile usage data, and so on and so on. But integration within the credit scoring is not so easy, but this is the, let's say, area where we are looking for the possible partnerships where, let's say, fintech or startup can, let's say, source the data and give us, let's say, more comprehensive information, which is easier to explain to regulators.
Very good, very good. So we have some people from startups here. We have people from bigger startups or corporates here. And obviously, the question is, how can startups and bigger companies collaborate together, right? What are the right approaches to do this collaboration? One of the things that I'm doing is helping European fintechs to get established in Asia. And one of the fintechs that I'm helping is precisely that. It's a company that is a B2B social network of particularly fintech companies, both startups and corporates, and it's focused on establishing matches. Those matches are clients you're looking for, investors, consultants, suppliers, et cetera, That company is called Finnovating, and it's very interesting. I wanted to ask you, how do you see, what avenues do you see for fintechs, like, for example, your companies, to collaborate with bigger, more established banks or other companies? You would like to take it?
I think this ties in really well to the previous question. I see two really interesting trends kind of converging. One is this explosion of AI that very much relies on historical data. And the second is this kind of narrowing window of data, because that is increasingly being regulated. GDPR was just the beginning, and I think increasingly individuals are, it's kind of anathema to just be the wild, wild west of just giving your data away. So I think that one of the natural partnerships is smaller fintechs like ourselves. We're not going to be able to just hoover up data indefinitely, and a lot of the larger corporates, like a True, have a lot of this data. So I think there's a collaboration opportunity therein. And secondly, for a fintech like ours, we partner with institutions that have licenses for regulated financial products because we are too small and it's too onerous a process to go through that ourselves. So I think writ large, what I'm pointing out is in areas that are hyper-regulated, I think those are the opportunities for fintechs and corporates to collaborate.
Perhaps I can add something for myself or from ourselves. So we built a funding application platform for a search engine for funding application or grant application in Germany, and now we deliver this platform as a white label to Vodafone. Vodafone, I think it's a quite big company, and we are a quite small company. And they use this application, or they use this search engine for different use case that we use it. We use it more like a marketing as a software as a service for that the SMEs can search something. But Vodafone use it now as an add-on for their marketing, and they say, okay, when you can find a good grant, when you can find a good loan, the chance that I can find my digitization project or whatever is bigger. So the Vodafone use our platform for different use cases than we use it. So I think fintechs or startups itself have to think about different use cases and to implement it in the company and add on as a company or whatever. So not only play one use case. We were lucky and play now another use case with Vodafone. So we deliver as a white label. So think about different form, different use cases. I think this is a big. This can be a good solution.
See, in our case, we are in lending, and as a fintech which is into lending, banks become a very natural partner because fintechs have the technology and the underwriting and customer segments which the banks do not want to serve, and banks have the large, cheap source of capital because most fintechs do not take deposits, and that's where it's a natural partnership for fintechs to have partnerships with banks. In India, there are several clear core lending guidelines that allow us to partner with banks. But for a company like ours, we are always looking to partner with banks outside our ecosystem, outside our geography, to see if we can bring our technology and can partner with banks in other geographies and be able to underwrite using that. So it's a very natural fit between a fintech and bank, because the fintechs are typically addressing something that the banks have not, and the fintechs need what the banks have, which is a cheap source of capital.
I feel like I have a lot in common with Anil here, because I think just to echo Anil's story, not only fintechs become this innovation arm and they can go out and acquire customers, but they acquire customers, they onboard customers, they start building those credit histories, and then that becomes a very natural acquisition channel for banks eventually, because fintechs can move fast, can implement more innovative technologies to lower the cost of customer acquisition, lower the risk, and take risks and acquire the sort of the invisible prime to for banks to cater to. Yeah.
Maybe I will just add from the bank strategy point of view, because we see the emerging fintechs from 2008, I think, after financial crisis, and every bank was in the fear, so they implemented. So it often was enough to have some nice PowerPoint slides for banks to implement some fintech solution out of the fear. But currently, let's say the landscape is changing a little bit also in the banking, and for example, banks are already establishing capabilities within technology landscape, AI, and so on. So they are more considerate when to, let's say, buy some startup fintech, borrow something, or to partner or build something. So even in our data or innovation strategy, we are thinking what are, let's say, our future core capabilities as a bank, and where do we really want to partner or build this capability for ourselves. So this is what is changing. For the fintechs, it means that, okay, these internal capabilities and knowledge base means that, for example, if some AI startup currently come, they need to know a lot about what they are doing. So it's not just we are doing AI by us. So really the capabilities on the bank sides are currently really high.
Yeah, but perhaps I can add something like in my consulting perspective, I work with startups, I work with big companies, I work with medium-sized companies, and big companies, as you work perhaps in, or you, like, they are the big boat in the sea, and they are like, and innovation is, you have to bring in a PowerPoint, you have this and this and this, and so not the innovation is a long process.
They struggle to innovate.
Yeah. And the disruption, mostly of the time, or perhaps even 90%, come from the startups. Come from the young companies. Who disrupt the market. That the disruption come from a big company itself, I don't see. So it's.
Well, here in Thailand, the banks, particularly in Thailand, the banks have been very good at driving the whole digitalization of the financial space, and a lot of fintechs in Thailand in particular were born inside the banks, which is very special if you compare it with other countries. I mean, I think Thailand has been quite special in that sense. It's absolutely not the case in other countries. But Thailand, banks in Thailand, yes, I have to say, they have been very innovative. They have managed to do that.
I agree to you. I see too. But in Europe, forget it.
Yeah.
I don't see in Europe.
Yeah, Europe is
a really special case in Thailand. I see too, the banks are like really innovative.
Okay, and that takes me to the last question, which is about the risks and the challenges of AI, particularly in fintech and in the financial sector, right? I mean, there are concerns about the use of, data privacy policies, concerns about the use of data. Is my data protected? Concerns also about the freedom of the consumer, right? AI allows for manipulation of the consumer in the same way you are coaching them and you are coaching women to make their investment relations. AI also allows for a manipulation of the customer, right? So I wanted to ask you about all these risks and what do you think the right approach will be to handle these risks? Who'd like to take it?
Should I go ahead? I think data privacy is a big challenge within the AI world, and how data will be used, and as the models become more and more mature, how they will impact the larger consumer. The one aspect within the risk spectrum of AI that I would like to address is the potential for disparate impact, the potential for discriminative impact of AI. Now, AI is not human. It is, what it is going for is efficiency and it's going for optimization. And when you do that, sometimes what is the most optimal and what's the most efficient decision may not be the best decision to make in the larger construct of a nation or a larger construct of a society, because this might lead to prioritization of consumers who are already having a lot of access, be it to credit or banking services, because that will be the most profitable to do. And we need to create guardrails, we need to create guidelines wherein there is a proper auditing of the AI models, whether they are conversational or otherwise, that we need to ensure that there is no disparate impact that is being caused by these AI models, that we will not be able to serve a section of customers, which is what we are trying to serve.
Yeah, I can bring an example from my last weekend. I write a book as a co-author for smart home and grants in Europe. And yeah, I write it with DeepL, this is a unicorn from Germany. And I write it with ChatGPT for sure. And it makes the writing book much more easier. But then I write about which grants are possible in the European Union, and what is writing these 13 points is so manipulative, it's like, oh, the European Union is so good and like this. And I said, write it from a different perspective or from another perspective, but it doesn't do, So it's really manipulative, as a one perspective, So you have to take care. Yeah. So I have to write it different. I have to think about the text and I have to different. And the problem is, this is not my problem. I can think about it, but perhaps for the youth people, for the young people who doesn't know it, for the pupils, whatever, that doesn't know what it brings out when they use it. And that's I think, is a fact that we have to take care about.
Yeah, I agree. I think people are starting to be aware of data privacy risks, data ownership. They're starting to understand that. But what they don't understand yet is the implications on freedom that AI could have, right? And I think we have a few seconds. I want to end with a provoking question, and we will see who wants to take this question, right? When do you think the next AI winter is going to be? How do you think it's going to happen, right? I mean, for those that don't know, there have been 3 AI winters so far. The first one was in 1974, triggered by the oil crisis. The second one was in 1987, triggered by a collapse in the hardware markets in the stock, and also the Japanese bubble. And the last one was the .com, right? When and how do you think there could be a 4th winter of AI, which is undoubtedly going to happen, but what do you think about that?
I think it goes back to my earlier point. I think the time is nigh that the endless foray into data is coming very close to an end. And once that ends, how is AI that depends on data and historicals going to be generating? Is it just going to depend on the existing amount of data, which kind of brings me to some of the risks inherent, particularly for underrepresented or marginalized group. You know, if all of the historical data demonstrates that women don't invest or women don't like to invest, what does that mean about the conjectures or projection that an AI machine is going to use in the future, especially if the data train has stopped? So I think, you know, I have a background as an attorney. I've been working on GDPR issues across different tech companies for a number of years. And when I say the data stream is nigh, it is very much, we're already seeing this kind of getting clipped away in a number of jurisdictions. So I think that's probably the biggest challenge posed to those who are heavily invested in AI. Are the alternatives either we find alternative data sources because the current ones are going to be cut off, or do we just say, okay, I guess the last 2,000 years of data is all we have, and just risk recreating a world that, you know, with biases and marginalization kind of inherently built into it?
I think the last 3 AI winters have been triggered by technical limitations, but I think now we're on the cusp of, to build on what you said, probably man-made limitations in terms of maybe we need to slow down because if you look at where the next iteration of ChatGPT, is a ChatGPT 10 going to get us to artificial general intelligence? Where are the regulations that are going to keep up with that? Is it quantum computing that's going to revolutionize AI? Is it the next iteration of the NVIDIA chips that's going to power, you know, bigger language models? So all of these things, I think technically we're getting ahead of ourselves, and perhaps it's time to slow down and look at, you know, what does all of this mean and where's the impact? Yeah.
Very good.
Maybe I will just add to what was mentioned. We need to distinguish between the customer-facing AI, like we see in the ChatGPT, and the AI that is used in, let's say, manufacturing. So I do not expect next AI winter because currently components for cars and so on are designed by artificial intelligence. But I fully agree with the, let's say, slowing down pace, because I see the key challenges in the consumer education, because, let's say, GDPR, PDPA, artificial intelligence, and a lot of regulations are just answers to customers simply do not know about what they are doing with data, and if you will have malicious players on the market, there will be need for the regulation. So in this case, yes, we are all also thinking in our bank how much is too much data to know about the customers, because currently the reputational risk and so on is the biggest risk. But I see it more like maybe not winter, but customer realization that okay, we are not maybe in the era of general artificial intelligence yet.
Can I just ask a question there? When was the last time technology ever slowed down? That's actually one of my concerns. I hear you, and I think theoretically I agree, but is there an instance when technology can kind of halt or slow down, or are you kind of calling for like governments to step in and say, hey, stop for a minute?
Well, I mean, I would say, I mean, in historical times, I mean, the technology revolution has been like what, maybe 70 years, so it's not such a long time to see a slowdown. But there are areas where there has been really indeed a slowdown. Like for example, cloning, right? When cloning started in the 90s, I remember Dolly Ship, no?
Yeah.
Et cetera, and a lot of people started to raise the ethical implications about that. After that, we have not seen further developments, much further developments in cloning. So that's something that has slowed down, particularly because of the ethical concerns that it involved. So is it possible that something like that could happen related to AI? If there is like a global consensus about that, and I don't know if it's going to be, maybe, I mean, cloning, I believe cloning is an example.
Yeah, I think we talk about the next evolution of AI being Neuralink, and we are talking about plugging in human intelligence with AI, and definitely a question for ethical consideration. But going back to your earlier question on when's the next funding winter, I have, as the AI winter, I have the answer, which is 2026, because you said 74 was the first, 13 years later was 87, 13 years later was 2000. It was supposed to happen in 2013, didn't happen, so it should be 2026 now.
In 2013 didn't happen, so maybe 2026, I don't know. Yeah.
I think it's not predictable. Because we didn't know that we talk about, before 1 year, we didn't know that we talk about generative AI or ChatGPT. We thought perhaps about flying cars, or perhaps about or flying taxis, about self-driving cars, and it's not coming. You know, I have a self-driving car startup in my consulting, and they don't get the access to the market now. You know, so it's since 5 years I tried, and they don't come. You know, I don't know why. You know, there are a lot of problems in that. You know, with the data that you don't get when you have there are so many problems. You know, so I don't think it's predictable when the next winter will come.
Okay, I think we are over time. It has been great to meet you and great to talk to you. And yeah, I think unless there is some question from the floor, we would close. Is there any question? Probably not. So it has been amazing to meet you. Let's keep in touch, and I wish you all the best in your companies and in your personal endeavors. Thank you very much.
Thank you, Pedro.
Thank you.
Thank you.